Hey everyone, welcome back to the Paradox of Net Worth, where we break down the world of finance so you can take control of your money and build your wealth. If you're on the fence about investing, today's episode is for you. Stick around because I'm going to tell you why 2025 is the perfect year to start investing, no matter where you're starting from. Friends, I've been helping people get out of debt and build wealth for decades. I've seen it all, from market crashes to soaring bull markets. Let me tell you, there's no time like the present to take control of your financial future. And right now, in 2025, the stars are aligning for those who are ready to invest. You might be thinking, Dave, investing is risky. I could lose everything. And you know what? You're not wrong. Investing does come with risks. But let me ask you this. Is it riskier to invest your money, or is it riskier to do nothing and let inflation eat away at your hard-earned savings? The truth is, the biggest risk is not taking any risk at all. By avoiding investing, you're guaranteeing that your money will lose value over time. I'm here to tell you that 2025 is your year to break free from fear and step into the world of investing. GAP3S. Let's take a quick journey back in time. Understanding the past can give us valuable insights into the future. Picture this. It's the year 2008. The global financial crisis is in full swing. Markets are crashing, fear is rampant, and people are pulling their money out of investments. But some savvy investors saw this as an opportunity. They understood that markets recover and that crises often present the best buying opportunities. GAP3S. Fast forward to 2020. The world was hit by a pandemic, causing unprecedented market volatility. Yet again, those with a keen eye for opportunity invested during the downturn. And today, they're reaping the rewards. GAP3S. What do these historical moments teach us? That in times of uncertainty, there lies potential. 2025 is one of those times. The economy is stabilizing, innovative technologies are emerging, and new markets are opening up. By learning from the past, you can position yourself to take advantage of the future. GAP3S. So, as we move forward, keep in mind the lessons of history. The most significant gains often come to those who are willing to invest when others are hesitant. Ready to see how 2025 can be your year? Let's dive in. GAP3S. Picture this. It's 2025, and the world is on the cusp of a technological revolution. Artificial intelligence is no longer a buzzword but a reality, transforming industries from healthcare to finance. Renewable energy sources are not just alternatives, but the primary means of powering our cities. Biotech advancements are extending lifespans and improving quality of life. The future is unfolding right before our eyes, and you have a front row seat. GAP3S. But how can you, as an investor, capitalize on these groundbreaking changes? The answer lies in understanding which sectors are poised for exponential growth. Companies in AI, green energy, and biotech are at the forefront of innovation, making breakthroughs that could shape our lives for decades to come. GAP3S. So, where do you start? If picking individual stocks feels daunting, there's a simpler way. ETFs, or exchange-traded funds, offer a diversified, relatively low-risk means of investing in these booming industries. Imagine riding the wave of these innovations and potentially seeing some impressive returns, all without the headache of selecting individual stocks. GAP3S. Investing in the future means being part of the change. It means putting your money where the world is heading. Ready to embrace the future? Let's dive deeper. GAP3S. Let's take a closer look at how technological innovations are reshaping the investment landscape. GAP3S. Consider the rapid advancements in AI. Companies like Tesla and Google are leading the charge in autonomous driving and machine learning, creating new markets and unprecedented opportunities for growth. GAP3S. In healthcare, biotech firms are making strides in gene editing and personalized medicine. Imagine investing in a company that finds a cure for a major disease, The potential returns could be astronomical. GAP 3S. Renewable energy is another sector experiencing exponential growth. Solar and wind power companies are not only contributing to a sustainable future, but are also proving to be lucrative investments. GAP 3S. These technological advancements are not just trends, they are transformative forces that are here to stay. By investing in these cutting-edge sectors, you are positioning yourself to ride the wave of innovation and potentially reap significant rewards. GAP 3S. Remember, the key is to stay informed and be proactive. The future of investment is being written now, and you have the chance to be part of it. GAP 3S. One of the most important principles in investing is diversification. GAP 3S. But what exactly does that mean? Simply put, diversification is the practice of spreading your investments across various asset classes to minimize risk. GAP 3S. Think of it as not putting all your eggs in one basket. GAP 3S. By investing in a mix of stocks, bonds, real estate, and other assets, you can protect yourself against significant losses if one particular market takes a downturn. GAP 3S. For instance, while tech stocks may be booming now, what happens if there's a sudden market correction? GAP 3S. If you've also invested in sectors like healthcare or renewable energy, you can offset potential losses in one area with gains in another. Cut to visual. A pie chart illustrating a diversified investment portfolio. GAP 3S. Diversification is not just about spreading risk, it's also about optimizing returns. GAP 3S. Different asset classes often perform differently under various economic conditions. GAP 3S. By having a well-diversified portfolio, you can capture growth opportunities across multiple markets. GAP 3S. In essence, diversification is your safety net and your growth engine. GAP 3S. So, as you embark on your investment journey, remember to diversify wisely. GAP 3S. It's the golden rule that can help you navigate the complexities of the financial world and build a more resilient portfolio. GAP 3ES. GAP 3S. Investing isn't just a numbers game, it's also a mental game. GAP 3S. Your mindset can be your greatest asset or your biggest liability. GAP 3S. Many investors fall into the trap of emotional decision-making. GAP 3S. Fear and greed are two powerful emotions that can lead to poor investment choices. GAP 3S. When the market dips, the instinct to sell off investments to cut losses is strong. GAP 3S. Conversely, when the market is soaring, the fear of missing out can drive people to make impulsive buys. Cut to visual. A roller coaster with a market emotions sign. GAP 3S. But successful investing requires a disciplined approach. GAP 3S. It's crucial to have a long-term perspective and stick to your investment strategy, even during turbulent times. GAP 3S. Warren Buffett famously said, "Be fearful when others are greedy and greedy when others are fearful." GAP 3S. This means you should avoid the herd mentality and focus on your own financial goals and risk tolerance. Cut to visual. A serene lake with a person meditating. GAP 3S. Developing a strong psychological foundation can help you weather the ups and downs of the market. GAP 3S. Techniques such as mindfulness, setting clear investment goals, and regular portfolio reviews can keep your emotions in check. GAP 3S. Remember, the market will always have its highs and lows, but maintaining a balanced mindset can ensure you stay on track. Cut to visual. A path leading to a distant horizon. GAP 3S. So, next time you feel the urge to make a hasty investment decision, take a step back, breathe, and remind yourself of your long-term objectives. GAP 3S. Investing is a marathon, not a sprint. GAP 3S. Keep your emotions in check, and you'll be better equipped to navigate the financial landscape with confidence. GAP 3S. Now, why 2025? We're seeing a unique convergence of factors that make this year a prime opportunity for investors. The global economy is finding its footing. New technologies are emerging at lightning speed. Renewable energy is booming. This is not the time to sit on the sidelines. Remember what happened after the 2008 financial crisis? Those who were brave enough to invest when everyone else was panicking saw incredible returns. History has a funny way of repeating itself. The key is to be smart, be strategic, and most importantly, get started. We're on the cusp of a technological revolution unlike anything we've ever seen. Artificial intelligence, biotechnology, renewable energy. These aren't just buzzwords, folks. They're real, tangible investment opportunities. Imagine investing in the next Google or Amazon in its early stages. That's the potential we're talking about here. But remember, investing isn't about picking the next hot stock. It's about finding solid companies with strong long-term growth potential. This is where your research comes in. Don't be afraid to ask questions, consult with financial advisors, and educate yourself about the companies and industries you're considering. Remember, knowledge is power. Section 4. Don't be scared, be prepared, ETFs and the power of starting small. Dave, you might be saying, this all sounds great, but I don't have thousands of dollars to invest, and you know what? That's okay. You don't need a fortune to get started. You can begin investing with as little as $50 a month. One of the easiest and most effective ways to start investing is through ETFs, or exchange-traded funds. Think of ETFs like baskets of stocks. Instead of putting all your eggs in one basket, you're diversifying your investments across hundreds or even thousands of companies. Starting small and staying consistent is the key. Remember the tortoise and the hare? Slow and steady wins the race, especially when it comes to investing. Section 5. Take control of your future. Invest today, secure tomorrow. Let's talk about the magic of compound interest. Imagine a snowball rolling down a hill. As it rolls, it picks up more snow, getting bigger and bigger. That's compound interest in action. The earlier you start investing, the more time your money has to grow exponentially. For example, if you invest $100 every month starting at age 25 and earn an average annual return of 7%, you'd have over $230,000 by the time you're 65. Start at age 35, and that number drops to around $100,000. That's the power of compound interest. The bottom line is this: your future self will thank you for starting today. Don't let fear or procrastination hold you back. Take that first step. Open an investment account. Start small, stay consistent, and watch your money grow. Remember, the best time to plant a tree was 20 years ago. The second best time is today.